Bloomberg is now on your dashboard. With Apple CarPlay and Android Auto, it gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. It's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it's all presented by our sponsor, Interactive Brokers.
Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast.
Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker studio. We're also streaming live on that YouTube thing. I think that's the internet. So go over to youtube.com and search Bloomberg Radio. Sean Scanlon joins us here, Comptroller for the state of Connecticut. I live in Jersey. Matt's in New York, so we said, let's bring a guy in from Connecticut.
Tri-state.
Exactly.
Here we go.
Tri-state area. Sean, what does a comptroller do?
It's the question I get a lot.
Because it's not controller.
I just actually Googled it.
Comptroller. So I'm essentially the chief financial officer of the state. We are the accountant. We pay all the bills, pay all the employees. I procure health care for 250,000 people. We do a lot of random things, but I guess CFO is probably the easiest way to explain it.
Okay. That being said, give us the state of finances in Connecticut.
Yeah, well, after a long time of people saying Connecticut's best days are behind them, we've actually seen some big turnarounds, and our governor, Ned Lamont, deserves a lot of credit for that. He came in 2018. We passed a bipartisan budget the year before he got there that has basically set up some fiscal controls that are right now bearing a lot of fruit, in the sense that we've had 5 years of consecutive budget surpluses. We've paid off almost $8 billion of our $40 billion of pension debt just in the last 4 years. And we've got a full rainy day fund for the first time in the history of the state. And a lot of that is due to us just staying with these fiscal controls that are obviously bearing fruit right now.
And before you were comptroller, starting 2014, you were elected state representative for Connecticut's 98th district. So you're not new to this whole political thing.
Not new to the whole political thing, and I got elected really young. I'm the youngest person ever to get elected this job, so even though I look like I'm 15, I actually have been doing this for a little bit, and I'm in my first year of this job, which I like a lot.
Stuff.
All right, so I have a question that I have been asking for years and years. As I live in Westchester, I pay, like, my property taxes are a German luxury sedan, right? Every year. And I get that we have very good schools in Westchester, and I get that we want our firemen to get paid, and the trash is taken out. But there are also very good schools in New Canaan or Darien, right? And the taxes are like a third of what they are in Westchester. Is that just because of graft and corruption that New York taxes are so high?
You didn't get the luxury sedan for your county tax payment, are you saying? No. Listen.
Why is it so high? New York and New Jersey are so much higher than Connecticut.
Layers of government, right? We don't have county government in Connecticut, so it's municipal government. Some people think that's a bad thing, and sometimes it is a bad thing. But when you pay taxes to your town, taxes to your county, taxes to your state, it just adds up and adds up. We don't necessarily have the services that maybe you do in Westchester County, but to your point, we've got amazing schools. We've got local police and fire. We've got great quality of life. And I think with this turnaround that we're seeing, we're actually starting to see people move. 57,000 people moved from New York State to Connecticut last year alone. You're starting to see that migration for obvious reasons, but also the reasons you're talking about.
So what's your take on the state and local tax deduction? Donald Trump and the Republicans capped it at $10,000 in 2017, ostensibly to raise revenue on the federal level, but it seems like it was more like retribution for those states that didn't vote for him. Is it helpful to you? Does it matter to you? Do you feel like your state is paying its fair share?
I think it's a problem. I mean, I think that I don't dabble a lot in federal politics because that would consume my entire life. But obviously, I think that it's having an impact on our region. You just joked about the tri-state. It's a tri-state issue. But for us, a lot of what we see is we have a lot of people that live in Fairfield County that work here in Manhattan every single day. And when that is adjusted properly, as we're doing now through these fiscal guardrails I'm talking about, when the markets are volatile, we actually save money and it can't be spent by politicians, so that when things are not going well on the market, we don't have budget imbalance problems. And that is that fiscal guardrail that I'm talking about that's bearing a lot of fruit right now and helping us big time. But the SALT cap does certainly impact a lot of folks in our state.
So you mentioned that there are some people out there that feel like the best days for Connecticut may be behind it. I know maybe great financial crisis. I know a lot of people that I know just said, the hell with this whole Wall Street thing. I'm out, including, and they left the tri-state area. But that crystallized to me in terms of companies leaving Connecticut and going to other parts of the country. Where are you in terms of trying to attract corporate entities back into the state?
Yeah, for years, the model was, let's try to pay a company a lot of money to move headquarters to Connecticut. And I think now we're changing that a little bit to say, let's try to authentically grow companies in Connecticut. And we're seeing that a lot around biotech. Yale is a great resource for us, right? We're between Boston and New York. There's a lot of people who are starting to invest in that. And we're seeing tremendous growth right now with biotech and medical innovation. We obviously have Fairfield County. We do see companies, that have left in the last 10 years. GE left, for example, and that was sort of when everyone sort of said, "Oh my God, it's over." But you are seeing that growth coming back now, and I think that that's a testament to people just feeling bullish on Connecticut for the first time in a long time.
What are you doing for your employees? I'm about to go on 6 months of paternity leave.
Okay.
And when I tell people that, they are astounded that Bloomberg offers that. But of course, they also say then, hey, can I get a job at Bloomberg? Right? It attracts people, these kinds of policies, not just that. But I noticed that you've got some, reproduction policies. You've got some pharmacy benefits policies.
Yeah.
What are you most excited about?
Well, listen, I love the fact that we can sort of do things within that 250,000 universe that I oversee, which is all the state employees, their family members, the retirees. It's like a little bit of a petri dish where we can sort of experiment with what works. And we find that when you treat your employees fairly, you pay them well, you give them rich benefits that allow them to sort of feel like secure and valued in their job, they stay and they're productive. We learn that best from the private sector, right? Companies like this, where you treat your employees well, it's a good place to work, it's a good environment. If we can find out how to do that at a lower scale and with less money, we can get that job done. But it's Connecticut is a state that has paid family leave. So every single person in Connecticut pays 0.5% of their income every pay period towards a paid family leave fund that allows anybody in the state to take advantage of that, to take time off for a baby, to take time off to care for a sick loved one. And so far that has worked. And I think companies have said, actually, this is good because we don't have to pay for it. You're paying for it, or they're paying for it.
What are the biggest challenges facing Connecticut these days?
Getting rid of that perception is still a problem, right? And we don't want that to be a self-fulfilling prophecy. So we want to change that perception, which is part of the reason why the governor spent so much time talking about, hey, it's a new day in Connecticut. To give us a look. But I think we continue to look at our tax structure. This year, we passed the largest single income tax cut in the history of the state, which is a big deal and affects literally 99% of our filers. The year before that, we passed the second biggest tax cut ever. So with these surpluses, with this better fiscal management, we're not just paying down our debt, which we have a lot of, but we're also cutting taxes and trying to figure out a way to make sure that Connecticut is going in the right direction and give guys like you some optimism that maybe you should stop paying those crazy taxes in New York and come over to Connecticut.
Absolutely love it. Absolutely love it. What about the transportation system? I mean, as you mentioned, a lot of women and men in Fairfield County work here, but also the whole Northeast Corridor.
Yeah.
I feel like right now is at a point where it could get better or it could get worse.
Yeah. Listen, the president just announced a couple of days ago he's investing a lot of money into infrastructure and specifically rail. That is going to help in Connecticut. There was 3 or 4 projects in that corridor itself that are going to get billions of dollars to help speed these trains up.
The House is looking at cutting Amtrak's budget by like 90% right now.
And this is the problem we have right now in politics, is that we don't have everybody on the same page about what are common sense things. If you live in this area, you should think that a train going faster and safely faster to Manhattan from Connecticut, Jersey, Long Island is a good thing for our
Boston,
national
DC.
economy.
Yeah.
We have a thing in Connecticut called the 30-30-30. We want to get from Stamford to Manhattan in 30 minutes and from Stamford to New Haven in 30 minutes. That's going to cost a lot of money, but to me, the investment is worth it. But I took Metro North down here this morning. It was very quick. It was very easy, and we just want more people to get back on the trains. We lost some ridership.
Yeah, see, he goes into Grand Central, though. I go into Penn Station, where the serious commuters go.
Yeah. No, dude. When you get off the train at Grand Central, you feel like a king.
I know. You guys are pampered. You got to come into Penn Station. That's where the hardy souls go. All right, Sean, thanks so much for joining us. Sean Scanlon, he is the Comptroller, not Controller, Comptroller for the state of Connecticut. We're going to call that the CFO of the state of Connecticut.
You're listening to The Tape, Cantor Live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
I saw some old guy walking through the hallways here with like a gray beard and all kinds of things. I don't know how we let him in, but I used to, what? But anyway, okay. So walking around. So just want to check in what's happening. It's Sam Fazeli. He's head of European research. He's a pharma analyst for Bloomberg Intelligence. We used to talk to him all the time back in the day about the pandemic and COVID and the virus and all the vaccines and all that kind of stuff. But that's done and dusted for me. So we're not even going to go there.
Didn't you just get your new vaccine?
I just got my booster because why not? I walked by the Walgreens and they're just like, "Come on in." So I did.
Did they give you a lollipop with it?
No, I got a little Walgreens.
I got some heart-shaped Band-Aids at the CVS.
Yeah,
I got a double vaccine a couple weeks ago. So I got the COVID in one arm and then the flu in the other.
Is that are we going to get one shot going forward, Sam?
That would be good, wouldn't it? Would you not roll up your sleeves more likely if it was all in one?
Yeah. Oh, yeah, for sure. I would be so much actually, I'll tell you what. I walked into the CVS, and my wife had made the appointment, but didn't tell me much about it. And they said, all right, we're going to do both arms. Or do you want two in the left and two in the right? And I said, wait, two? And I seriously considered sneaking out because I'm terrified of needles, but it didn't hurt.
Yeah.
No, but in one, it just makes it easier for people to make a decision.
All right, didn't even want to go there. I want to talk about the newest thing in healthcare, which are these weight loss drugs, Ozempic and all this kind of stuff. Even he's talking about it.
I'm so excited about it.
No, we're not doing that. So, and I know you guys at Bloomberg Intelligence have done a ton of work on it. Talk to us about this market, the opportunities, all that kind of stuff.
First of all, I don't know what you see, but neither of these guys actually need them, right?
Yes.
I definitely need to lose 20 pounds. And
so they can put it back on at Christmas again.
Well, that's my problem. And to get a little more personal than I normally would, the doctor says I'm pre-diabetic.
Oh, so that would be a good reason to do it.
Yeah.
To lose weight. Whether you take the drug to do it or you do it because you've been running a lot more, etc., or standing a lot more.
Now, these drugs have been around for a while for diabetes, right?
Yep. I think we're definitely into the second decade, because the first version, which was Victoza, that came out, that's years ago.
So why has this now become the topic for pretty much every kitchen table about getting these weight loss drugs?
Right at the beginning, you could tell with Victoza, which is a low dose every day. So who's going to want to take a drug every day that's less effective than what we've got now, which is a higher dose once weekly? That's what changed. Right?
I mean, a lot of people take drugs every day.
No, but not you don't. Well, yeah, not that many. We're aiming for like 50 million people to take these drugs. That's the sort of volume that these companies are aiming at.
So now they have. I actually had a friend I had lunch with the other day. He didn't eat very much. Who's doing the pill version? Ozempic is Novo Nordisk's diabetes drug, right?
Correct.
Wegovy is their weight loss drug.
Same active.
And then they have Rybelsus.
Rybelsus.
Yeah. Which
Rybelsus.
is the pill form.
Yeah.
And does that not work quite as well? And it's a higher dose. And
it's harder you have to have it with a certain window of eating before eating, because otherwise, if you do it too late, it interferes with its absorption. And also, if you do it too late, you've already eaten.
Right.
So that makes it a bit more complicated. Wegovy once a week, you forget about it.
And you inject yourself, right?
Yep.
Once a week,
easy,
and you do it yourself.
Easy. Yeah. All right. Yeah, great. But are we going to get to a point where it's just you take a pill once a day, which everybody does anyway, and then this market's going to explode.
So we've got data. There's a couple of things we're waiting for. One is this weekend, you're going to get the detailed cardiovascular data from Novo Nordisk.
Okay.
And the critical element of that is how well did it do in people over 65? Because that's relevant for Medicare coverage. The people who really need it, how much benefit do they get? The oral drugs, in the next 12 months, we get some meaningful data from Amgen, from a whole host of other companies, right? So that's what we're looking for. Do these drugs, are the orals as good? Are they only something that you add into the treatment paradigm saying, okay, you've lost your weight with the injection over 16 weeks. From now on, you go on to the oral and maintain your weight.
Why is the skin pop better than, like, could they have a transdermal patch?
But you don't need it. But
Yeah.
Transdermal patch has got, would you wear one for 16 weeks? If you're diabetic, I guess you would think about that. But honestly, the amount of money that has to be invested to do that, the injections once a week, very easy.
What do you think about, so you are running this Bloomberg Intelligence research in Europe, but really for the globe. We've had companies that are worried about declining revenue. Walmart says people have a smaller basket. Pepsi said they haven't really seen the data to convince them yet, but clearly, we're going to buy fewer Fritos if we're all taking Ozempic. Is it going to affect loads of different businesses?
3% of obese people at the moment globally are taking these drugs. So if that was the driver of their margins and that if they were the marginal buyers of product, then we have a problem. From 2030 onwards, when they become cheaper, either generic or because of the Inflation Reduction Act, that's when you might start seeing people taking them much more commonly. And the other thing is, I still want to see 5 or 6 years of safety data for the Wegovy dose, because it's 2.5 times or 5 times higher than the diabetes dose. And we don't know what the side effect is. But of course, Lilly uses the same dose.
So
Interesting.
now you guys,
So
again,
I guess I should wait for the data.
You're not doing anything. Nobody in this room's getting any of these drugs. But I mean, you guys did some work on this. I got to think the U.S. market is just prime market for these companies. Is that where the...
All you have to do is walk outside.
I know.
All you have to do is walk outside. 70 billion is where our current model sits on a global
You think
basis.
70 billion annually in these types of drug sales?
That's where we're at in terms of market size, which obviously is about the same sort of revenue line, I think, average that this consensus has. So I think everybody's going after the same rough
And how
numbers.
big is 70 billion in your world of pharmaceuticals?
Oh, that's a lot.
That's a lot.
For a class...
That's 70 blockbusters.
Oh, no. For a class of drugs, no. We have... actually, 70 billion, I think even in the immuno-oncology world, we're not getting to 70 billion.
Really?
No. This is big.
This is big. All right. So
everything about these drugs is big.
Can you remember, would statins have been comparable when they first came out?
Yeah. So statins, when Pfizer's Lipitor was around, that was the biggest drug. And then then AbbVie's Humira for rheumatoid arthritis, that became the biggest drug only a couple of years ago, and now currently it's an immuno-oncology drug, Keytruda from Merck. But these guys will probably overtake that.
All right, Sam, thanks so much for joining us. Sam Fazeli, head of European research. He's a pharma analyst as well during the day for Bloomberg Intelligence, based in London, somewhere in France too. I don't know what that's all about. That's a scam, but he's in New York right here. So
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming on YouTube as well. Matt, after slinging stocks on to institutional investors for 30 years, there's very rare is it when somebody walks in this studio and is a money manager of any size that I don't know, I haven't heard of. Well, that just happened here. Matt Smith, he's investment director at Ruffer, and I have no idea what Ruffer is, so we're going to start right there. Matt, thanks so much for joining us. I know you're based in London. You're joining us here in our New York studio. Tell us about Ruffer. What do you guys do?
Thanks, Paul. Great to be here. So we are a London-based asset manager focused on absolute return. So we have one main objective, which is to avoid losing money.
I like that.
That sounds pretty unimpressive, but or unambitious, but it's helped us deliver positive returns in the dot-com bust, global financial crisis, March 2020.
So you're more than like 15 minutes old, right? You guys have been around a while?
We have, 1994.
How come I've never heard of you?
So we only started marketing, making ourselves available to U.S. clients at the beginning of last year.
Oh, okay. All right. So absolute return. Are you long only, long short? Are you a hedge fund? What's your structure?
We're a hedge fund, and what we're focused on doing is studying regimes, market regimes, inflation regimes, predicting them in advance.
So what's an example of that?
ZERP.
The change from ZERP, the exit from ZERP. Is it going to stick with us? Higher rates, or are we going to go back to where we were?
Zero interest rate policy?
That's right. Zero interest rate policy. Some people say NERP, I think.
Japanese is still in NERP,
Yeah.
negative interest rate policy.
But so right now we're shifting from ZERP back to what, normal? Or how does it look to you?
So we are of the firm belief that there has been a regime change from an era of low inflation and low interest rates to a new era of higher inflation, more volatile inflation, and a structurally rising set of interest rates, higher highs and higher lows.
So that's interesting, because I would have thought maybe we're in a new interest rate regime, call it back to normal or higher for longer or whatever you like, out of zero. And as a result of that change, we have the volatility in inflation. But it seems to a lot of people that inflation really did turn out to be transitory, just took a longer time than expected, and now we're just going to get back to a normal level of inflation like we are getting back to a normal level of rates.
I think the best way to characterize the change is that we've moved from a ceiling of 2% inflation to a floor of 2% inflation. That sounds like not much, but that's a very dramatic shift.
Yeah, that sounds uncool to me, actually.
It makes life significantly more difficult for two people in the economy, the US government and how they calibrate fiscal spending, and the Fed. And we have one core structural macro thesis, that the Fed is a paper tiger. When they are faced with a slowdown in the economy or a slowdown in markets, they will cut hard, just like they did in the mid 60s. They'll cut excessively, and they won't have dealt with inflation sufficiently before they enter the easing cycle.
All right. So
doesn't Jay Powell explicitly say he wants to avoid that? I mean, isn't the whole idea of Jay Powell, or was until I guess last week, that he wants to make sure he does not repeat the Burnsian mistakes of that Fed?
That is absolutely what he has to say in advance. Yeah. But not even Arthur Burns wanted to be Arthur Burns in advance. Central bankers, honestly, they're products of their time, not independent. Ultimately, the Fed is responsible to Congress. And if they are frustrating the will of Congress by getting in the way of government spending or a strong economy, they'll just be sidelined.
So how has your investment focus or strategy at Ruffer changed in the last couple of years as we are now in a different world?
So our view actually switched, that the world was from a deflationary world to a world that will end in inflation in December 2008. So we've been preparing and thinking about this for some time. Clearly it's been accelerated by COVID. What it means is that you have to have a portfolio that is not reliant on bonds for protection structurally. You have to be more dynamic and agile with your asset allocation. So put another way, the things that worked best in the prior regime, long the 30-year treasury and long the big tech stocks basically, and crucially a passive approach or a static asset allocation, that is through this new regime the worst possible approach, we think. That doesn't mean it won't have good moments, and actually we think right now is a good moment for the 30-year treasury, but you've got to be a lot more dynamic than
So what is your asset allocation today versus maybe what it was a few years ago?
So we have a core structural allocation to 30-year TIPS, the inflation-linked securities, and the 50-year equivalent in the UK, to protect our clients against the risk of inflation eroding away their capital. At the moment, we are pretty concerned about the potential for a sharp sell-off, or put another way, for any market sell-off to be pretty self-feeding. And so we have credit protection, we have volatility protection through things like the VIX.
By the way, when you say sell-off, do you mean in bonds or in stocks or like risk assets in general? What are you thinking of?
Most likely a stock sell-off. But the way that the Fed is implementing monetary policy this cycle means that any equity market sell-off is probably a contagious event into wider risk markets.
So we see a sell-off in the S&P. That means they're going to also sell like Paul's going to sell his 2-year treasuries?
That he will probably, or wider asset managers will be like, okay, stocks are going down. I'm going to be buying treasury bills just to keep my risk at a low level. And what that does is force money into the Fed's RRP facility, denying it to the banking system. And that just makes the setup even more fragile just at the point where markets need liquidity.
All right, so what do you... I'm trying to think. So what have you added to your portfolio in the last 6 months?
A couple of things. So we've started to go very long duration bonds for the first time.
Treasury bonds or corporates or?
Treasury bonds.
Treasury bonds.
So
okay.
we want to steer clear of corporate bonds. In fact, really.
It sounds boring what you guys are doing.
No, this is exciting.
No, treasuries?
You're going long duration.
I want you to buy Disney stock.
So the 30-year Treasury is more volatile than the S&P at the moment.
That's not good.
It's not good.
But it's exciting, is the
I
point.
guess.
It's not boring.
If you're trading the long
Don't forget,
one.
we're in the business of trying to avoid losing money.
Yes,
We're about preserving capital for our investors through time.
How did you just follow up on that 2022 when equities were down big, fixed income was down big?
We were up around 6%.
You were not.
And that was thanks mainly to our derivative positions.
Okay.
We've been worried about a correlated sell-off in equities and bonds for about a decade by that point. We finally,
you got it in
finally saw the
2022.
preconditions line up. So we were long of, we effectively short interest rates, short of crowded stocks in particular. That's something that's very vulnerable if liquidity is coming out of the system. This year has been a lot more difficult. We've been expecting yields to start biting on stock markets a lot sooner than they have. But we think we've reached a pretty critical point where if yields start to go much higher than 5%, that's going to be doing real damage to.
So you don't think we've seen a peak in yields? You think that there could be a sell-off, even at the long end of the curve, that drives yields higher than 5% on 10s, 20s, 30s?
I think what I'm saying is that if yields do go through 5%, that will be dangerous for markets. So from a portfolio perspective, you can be long of the 10-year, the 30-year, provided you've got protection against a risk asset sell-off, and construct a nice balanced portfolio with those assets.
Cool.
I mean, I'm looking at your website. How come I never?
I want to
got in front of these
sit Matt down with like Cam Harvey.
Yes.
To debate inflation. So he's
I would love to do that.
he says
Come on
that
down to Duke with
inflation
me
is
tomorrow.
it's whipped, and he says it's below 2, and the Fed is just looking at the wrong data points, for example, to price housing inflation.
I mean, this is what gives you the opportunity in investment terms. The market currently prices 30-year inflation at 2.5%. So that's the market saying the Fed has got this. They have tightened, and crucially, they can stay tight. And that's what I think is just not correct. So that gives you the opportunity to buy inflation expectations at that price.
Do you think the Fed is going to cut the minute we see an economic downturn, and it's going to go too far and inflation's going to come roaring back?
Absolutely.
All right, good stuff, man. I'm glad we got
Very cool.
Matt Smith, investment director, Ruffer, in the city of London. They're in Edinburgh, they're in Paris. Next time you're in New York, let us know. We'll get you back on. We'll see about what's going on.
I think they say Edinburgh.
Edinburgh?
Edinburgh.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Philip Richter here, president of Hollow Brook Wealth Management, who I know from a car show that he puts on out in Bedford. And I want to talk with Philip a little bit about the markets, but also a little bit about cars and collections, because
I'd rather talk about like that, again, the car market, the art market, because interest rates are higher, right?
Yes.
It's not just interest rates higher, bond prices lower, other stuff goes lower, right? I mean, it impacts valuations for everything, right?
I mean, I don't know. Well, Philip, let's ask you. What do higher interest rates do to the collector car market?
So at Hollow Brook, we work with a lot of art collectors and car collectors, so we stay very close to this market. And what's happening is this bifurcation. You're reading about the art market's down 24% year to date. We've got this unbelievable auction this evening, Emily Fisher Landau's collection, in beautiful collection of art. These are Rothkos, the best Rothkos, the best the best of the best, the Jasper Johns and so forth. These will sell for big money. Right? These are not that lower tier or mid tier art. This is the best. It will not come to market again.
So when you say art market is down 24%, that doesn't include this kind of art.
I think it's bifurcating, and we're seeing the same thing in the collector car world. Right? The GTO that's going to be auctioned in a few days
at Sotheby's on Monday.
Sotheby's. Yeah. Yep. And then the big auction in Vegas that RM Sotheby's having. There are 2 Mercedes-Benz CLK GTRs being auctioned in Vegas. You never see those cars come up for sale, let alone 2. So these are the best of the best, and whether the Dow's at 34,000 or 5,000, there is a market for these cars because they will not come back to auction in a long time.
All right, so interest rates have basically no effect on, the GTO, which is, by the way, if you've seen Ferris Bueller's Day Off, yes. Right? That's the car. Oh. I mean, that wasn't a real one, obviously, that they pushed out the back window of his dad's garage. But
that was a California Spider.
Yeah, right. And at the time, that was also one of the most expensive cars ever sold. I think I remember hearing when I was a kid that it was going for like $14 million. Now we're expecting a price of more than twice that from the Sotheby's auction on Monday. Doesn't matter. When someone buys these cars, she or he doesn't care if rates are 0 or 10, right?
Yeah, well, I think it does matter. I mean, interest rates affect everything. They affect equities. They affect real assets. I think there's a lag effect, right? It takes time. We had 10 years of free money, of QE, and suddenly we're in a different environment. We had cheap energy. We didn't have geopolitical conflicts to speak of. We had globalization going gangbusters, and now suddenly we're in a different world of a 4.5% to 5% 10-year. This takes time to meander through the system. What I'm saying is the best of the best, a GTO or a Calder that Emily Fisher Landau bought years ago, those are different. That's a different ballgame.
By the way, tell us about the GTO. I mean, there's the one I mentioned in the movie. There's
that was a California Spider, actually.
Okay, so I think also Nick Mason has a GTO.
Yep.
Right?
It's a club.
Who's Nick Mason?
The drummer for Pink Floyd.
Thank you.
He also is a big car collector and has, I think, a fund that people have invested in. Why is Ferrari GTO, like, why is that the top?
It's the single most iconic car that Ferrari ever built. Most of them were raced.
And when did they build it, more or less?
In the early 60s, 62, 63, 64 time. And yeah, the styling of it is just outrageous. When you see a GTO, it doesn't look like any other car on the road or any other Ferrari for that matter. Its folklore is growing by leaps and bounds every day with Ferrari's popularity and Ferrari's mystique, the Ford versus Ferrari movie. The GTO is really the nucleus of what Enzo Ferrari wanted to do, and the GTO is unique because it was a car you could drive to the track and you could race and be competitive in the car, very competitive. So it's a incredibly unique asset. Right, and this one that's for sale at Sotheby's, I think the numbers are going to be unbelievable.
Who's selling? Do we know who owns it now?
Yeah, the owner is known. I think he's a gentleman from Ohio. I read the article. I forget who.
Okay.
The great state of Ohio.
The great state of Ohio.
I believe so. Somewhere in the Midwest.
So I went to the Concours d'Elegance at Pebble Beach for many, many, many years. This past year, for example, were the proceeds up or down, or they don't care as well?
So I will tell you, I was there. I spoke on a panel, and I spent the weekend in Monterey, and I walked all the auction houses. I went to Gooding, I went to RM, and I will tell you the quality of cars that are coming on the market, so high. The Gooding auction in particular, I mean, some of the vehicles they had there, things that haven't been seen in years. And you wonder, like, where have all these cars been? Why are they coming out of the woodwork now? They're coming out of the woodwork now because markets are high, valuations are high. It's a global market now. And they can realize incredible
prices. It is a global
prices.
market because, I mean, we lived in Carmel for a long time. Sleepy little town, tourist town, But during the concourse, it is like the United Nations. I mean, people speaking every different language walking down Ocean Avenue.
Do car collectors get the same kind of respect that art collectors have? I always thought as a kid it was crazy that somebody would pay more for a picture of flowers that a guy named Van Gogh painted than they would pay for a Ferrari. Like, you can't drive a painting, right?
Well, Matt, that's changing now. I think collector cars are becoming a legitimate asset class that people want to own. You can enjoy them. You can share. For example, the GTO. The celebrities and the level of people that own GTOs, they get together socially and they do drives together, and there are things worldwide. They ship the cars all over the world and they drive through Venice or wherever they go to Sicily. They do all of that. So there's a social component to this that doesn't really, I think, exist as much in the art world, although it's obviously very social too. But I think the collector car world is moving up as an industry, as a legitimate asset category. And if the electric drive phenomenon accelerates, a lot of these cars, these intricate, beautiful V12 handcrafted devices, that's not going to be being made anymore, right? We're going to have electric appliances.
Do you think that day's going to come?
I think we're a long way off.
I do too.
I think their electric cars have a place in certain applications. In Florida, great. You got clean power, and you've got good temperatures, but long haul, northeast, cold temperatures, it's not a total solution.
Like, are your Ferrari and Lamborghinis? I mean, they're not going to make electric vehicles, are they?
They are going to make electric vehicles, yeah. And they might be
knuckleheads that like those cars. It's the sound.
Yeah,
like.
It's not only the sound; it's the vibrations, it's the smell, and for Philip, I'm sure it's the hand built.
It's the engineering.
Yeah.
Yes.
I mean, a V12 Ferrari motor is one of the most beautiful things to behold if you're an engineer and you like machinery. Incredible miracle device under the hood.
Are there more ways for investors to get into this asset class other than going to a Sotheby's auction and buying, a GTO or a Mercedes?
There's a lot of on-ramps to the car world. I mean, I was just going to mention, Bring a Trailer has really revolutionized the access to the market globally. So there are some fantastic cars being sold on Bring a Trailer at all budgets. So you can buy the single best Volkswagen Cabriolet in the world and wait on Bring a Trailer and find it, or you can buy a Duesenberg on Bring a Trailer.
We only have a minute left, Philip, and I want you to tell us about the Turtle Invitational, because I went to what I believe was the fourth.
Turtle Invitational.
Turtle Invitational. Yeah. That's the car show that he puts on in Bedford.
Yep.
Tell us about it.
So the Turtle Invitational 4 is a biennial event. We do it every other year. It benefits the Malcolm Prey Achievement Center in Bedford, New York. Malcolm Prey was one of the first Porsche, Audi, Volkswagen dealers in the United States in Greenwich. We do great things for kids there, teaching them entrepreneurial pursuits and enlightening them to new pursuits. And I decided to have a really special collector car event that would honor Malcolm Prey's legacy, but also raise money for his charity and awareness.
When is it?
It's in September, late September, every other year. So we're September 21st, 2025, and you can go to the website, turtleinvitational.com. There's more info there.
Okay. I know a couple of the Sweeney offspring that would be interested in that. I got a couple of car
geeks. It's very cool.
In my offspring. Yeah, that's what happens when you spend a lot of time in Carmel, California. Philip Richter, thank you so much for joining us. Philip Richter is the president of Hollow Brook Wealth Management, joining us live here in our Bloomberg Interactive Broker Studio.
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.